Imagine if you could invest in a property in a foreign country and not do anything else, but that property will give you not just income, capital appreciation, but also a passport, a citizenship for life. We're going to go through all the different options around the world, and we're going to explain the pros and cons and the ones I feel are the best ones to give you the best ROI on the passport, on the property, and on life in general. Hi, this is Jeremy from the Millionaire Migrant. So I've been in this industry for 15 years. That is to say, helping people to get second passports and citizenships and residencies. But going even further back than that, I have been investing in property. So today we're going to talk about my two favorite things and two areas of expertise, which is real estate and second passports. First up, I'm going to go through all the countries here, but let's just get a few things out of the way. First of all, I'm not going to talk about Cambodia. I'm not going to talk about Costa Rica. Now, both of these have some kind of program where you invest in property and you get the passport. But still today, of 15 years, I have been in this industry of citizenship by investment, which also, by the way, includes a lot of property options. So we have to get involved on this. And so we lean on our expertise, our analysts, and our real estate department to help people. But I've never had anyone say, oh, look, here's a Cambodia passport that I got by investing in real estate. Costa Rica, definitely. Cambodia, I've heard about it, not seen it. But I also know that for what you get to pay in Cambodia, for what you're going to get in the passport, it is not a good deal. It doesn't look like a good deal, and it's not a straightforward deal. So let's just go through the straightforward ones. And we are only going to do today citizenship by investment, so investing to get the passport. We're not going to talk about residency by investment through property. So that means we're not going to talk about Greece, which doesn't really lead to citizenship unless obviously you live there. But then if you're going to live there, you could live in any country and get the passport. We're not also going to talk about Georgia or Panama, for example. Those are residency options if you want to be able to get the property, invest in the property, even though I think Georgia is a good market. Panama is okay. I was there recently. Georgia, I was there recently, but Georgia is looking a little bit better for investing. We're not going to do that today. We're going to talk about properties and passports. There's one important point that I really want to talk about now, which I think is very important coming from someone who's been in this industry for a decade and a half. Why do countries implement a real estate component or not implement a real estate component for people who wish to acquire a second nationality? No one really talks about this. Everyone is looking to consume and to buy, and people want to sell. But if I explain it to you from the government perspective, maybe that would help you make a very educated decision in terms of the way forward. So firstly, the reason why governments implement a real estate component is because they know that it's a passive investment. It's something that everybody understands because we all live in some kind of real estate. And so they add that because they know that is going to really attract business. The downside is it doesn't actually create that many jobs unless, of course, it's a real new development. In terms of brokers, they will get some fees, renovating companies, contractors, potentially. But it's not like you just donate it straight to the government, obviously. But at the same time, it does stimulate the economy in a certain way. If you look at how Portugal, where it was after the financial crisis, to where Lisbon is today, Cascais is, and all the cities and towns and coastal resorts in between, it's been truly transformed by the fact that it had a real estate component that allowed people to invest. So it was a win for the government, it's a win for a lot of people. I don't see that really happening in the long term. I see that it's going to move towards talent and capital and job creation. But the reason why that a lot of governments implemented this is because they would say, you know what, let's try and stimulate the economy through construction. The only thing I would say in addition to that is that if you are going to create jobs, you will also notice that a lot of governments, particularly in the Caribbean, they would stipulate that very clearly you should be building or investing in a project that hasn't actually started, hasn't launched, so that you do create something that wasn't there. If you just buy a house that's already there, the government is really benefiting from that, right? And so that's why in the Caribbean, you'll also see government fees in addition to the actual construction or the property that you're investing in as well. Because obviously if you bought a property that was there, then that isn't really helping their economy, which is why they're looking to have such a program, a citizenship by investment program. So straight up, let's just get Caribbean out the way. So as you may or may not know, I have been in the second citizenship industry as an accredited agent for over 10 years, 15 years when I was just starting my business and just with my little IKEA desks here and there. So I've seen a lot of real estate transactions for people who have acquired the nationality. I've seen good deals, bad deals. I've seen amazing deals. Like probably one of them is the best deal I've ever seen in my life. And I'll talk about that a bit later. But a lot of this all started in the Caribbean until the European countries started to introduce their programs, the most famous of which are the most known, which would be the Portugal one, where people would invest in properties from as little as 280,000 euros. Obviously now that option is no longer there. But we start to see that more and more countries would introduce real estate components as a way for people to obtain a residency and or a citizenship. Let's move on. Caribbean, you got 5 options. They all have a real estate option. One of them I probably wouldn't recommend. I think I should caveat that everything I say about this is that generally speaking, you should understand that yes, You don't want to donate your money. You don't do a non-refundable investment. You'd like to have some kind of asset that, you know, you can feel that your money can be liquidated at the future after the required hold time, which is usually 3, 4, 5 years, and that you can get your money back a little bit more, hopefully the same, at least some rental income. In reality, though, the market in the Caribbean is not a very liquid market because you have small population, not huge amounts of people moving there, and therefore there's not a lot of liquidity in the market. Some countries will do better than others, but this is why if you do want to go into real estate, just understand that you could be looking to sell your property for some time. We've helped some of our clients to sell their properties. Some of them, they can't sell their properties, and we get a lot of people contacting us from other agents, or I don't know who they did it with, contacting us saying, please help me to sell my property. So please, DYDD, as I always tell you, do your due diligence. Dominica. Now, Dominica has been totally transformed and is actually a poster boy for why you should have a real estate component for investing in the Caribbean. I've been doing Dominica for a dozen years now, 12 years or so, and I can tell you it's truly transformed, and it has been using a lot of the funds from all the people who have been investing there in that country to obtain the second nationality. And it's a lot more developed in terms of hotel infrastructure, social housing. They've got an international airport that's been built. So that is a success story. Unfortunately, I wouldn't extend that so much to the other countries, but those other countries also won in different ways. But Dominica is a place that had very limited accredited developers. So you need to be an approved developer if you want to be able to launch a project that qualifies for citizenship by investment. Don't go, guys, into any of the 5 countries that do citizenship by investment and buy any property, because you just won't get a passport. So you need to invest in a project that is actually accredited by the government. So if you do invest in that, Dominica, what it did was actually quite smart, is it limited the number of developers who would be accredited. There are other countries, which I would say probably Antigua, if I'm not mistaken, had really a lot of developers authorized. Yes, Antigua actually is a much bigger island. It's a much more diversified economy. It has so many more beaches. So I can understand why they did that. But what happened in Dominica, they kept it limited. And so a lot of those have actually started to make their way and have actually handed over. So there's a smart move that Dominica did. In terms of buying now, I would say there's probably only one project I would probably say is a good investment for some clients. I did actually have probably the best deal I've ever seen, which is a client who got a guaranteed buyback and they got their money back. I saw it with my own eyes, and they got their rental income, which basically meant, and I've never seen this before, a citizenship for free. So I've never seen that before or since, but that was one of our clients, so I'm very proud to talk about that. I would say Grenada is a pretty decent bet right now because the passport's very strong. The projects they've got there, some of them are amazing, top quality. I've seen some of those projects. That one is starting from $270,000. I've got to mention Dominica's $200,000, so a lower price point. But Grenada's $270,000. Very strong passport. It has more countries visa free than Dominica. And the real estate there, some of our clients have got some very good deals from there. They still today don't even want to sell, actually. They get very good rent. And I think one of the reasons is that using my real estate background, I would tell clients, try to get properties that don't have too many hotel elements, because hotel elements means your room charge or your fraction or your share or your property or whatever you own is going to have very high hotel management fees. You know, you're going to have to pay for the brand, you're going to pay for the staff, the training, and just keeping the standards high. That is also good in terms of maintaining the quality of that property. I do understand, but sometimes these HOA fees have been crazy. And some of our clients, they bought where they didn't even have a swimming pool in the condominium project, which you may think, well, okay, why would I do that? But actually that swimming pool costs a lot of money. So when it's not rented, which you have occupancy voids, they were cool, they were fine. It was like literally $20 a month. So that's where we had some good examples, and that was in Grenada. If we go to Antigua's a stunning island. I mean, if you actually want to live there, by the way, of all the 5 countries, it's the most attractive from a tax perspective. So Antigua is very nice if you want to live there, get to use some time there. You've got Jolly Harbor, which I know very well. It's a very nice area, but you've got other parts of Antigua. You've got Barbuda, where they're going to be building now the Nobu. So you've got that option as well. There's a lot to choose from. Just make sure you go with a project that really has good sales. There's another project there in Antigua called Tamarind Hills. So I know very well some of the guys there. That was a really nice project. There's a few to mention, and sorry if I didn't mention some of the guys I know in Antigua who have projects there, but you know who you are. The last 2 we should look at is St. Lucia and St. Kitts. I'll be straight out the door and just say St. Lucia even though it has a real estate component, none of the projects have actually reached completion. So you have a lot of projects going on. Sorry, not a lot, there's only a few projects. But the thing is, nothing's handed over. So you're going in and you don't really know what you're going to end up with. A lot of people have ended up typically doing the bond, which I just think is a very underrated option. The bond is really an attractive idea. We have clients who have invested in the bond, the government bond, the St. Lucia government bond, which is 350,000, and they have got their money back. They obviously don't get anything on the bond, but if you think about it, again, that's a crazy return on investment, apart from obviously the fact the opportunity cost of tying up that type of capital, which you could have, let's say, done a non-refundable donation, use the balance, put it into Bitcoin, gold, or whatever it might be, and then you'd have a much better ROI. And then lastly, you've got St. Kitts and Nevis. St. Kitts and Nevis is, unfortunately to say, regarding the pricing structure that they've got there, has always been a bit of an issue, because what's happening with St. Kitts and Nevis is that initially, when I first started out, it was $400,000. Then it dropped to $200,000. Then it went up to $400,000, and then it's now currently at $325,000. This is none of the blame on the existing people in charge, because the new guy in charge, I think everyone is universally in agreement that he's doing a fantastic job. There's a lot of changes since he's come in, and I think he's really, a lot of people are super happy with him, investors and accredited agents and people alike. The problem is what's happening in the past is that when there were different changes where they would increase and decrease. If you bought a property at 400, now you're having to sell it at half price to be competing with what's out there in the market. And this is another factor to consider when you're investing in real estate in the Caribbean, is that legislation could change. And by the way, it happened in all the other countries, actually. Some were at 200, and then you got to 270, 350, somewhere at 300, there were 200. But the St. Kitts one is the one that is the most extreme, because it just changed 3 times now. And you're kind of a little bit left in the lurch, because if the threshold changes and you're on the wrong side of that, you're kind of stuck. So that's something to bear in mind. There is something I would add regarding St. Kitts, which the others don't have, which is quite interesting, is that you can get your property evaluated by the SKIPA, which is the St. Kitts Investment Promotion Agency, which they will look at your property, and then say, for example, you don't want to buy what's on the shelf, and you say, I want to buy this property here because I like it. And typically you're looking at someone who's an end user, let's say you're an American, a snowbird, North American, and you want to have a property there. You can then take that property and get it accredited, valued by the government, and then they will be able to make it eligible for citizenship. So that's something that is possible. It's not an easy process. It's a fairly complicated process. But again, I think the new guy is doing a very good job, and I'm sure that if it gets raised to his attention, he'll probably get that those crinkles ironed out. But that's very important for you to know. And again, maybe no one really tells you about this stuff, but it's important for you to know this. Let's zoom out from the Caribbean and let's look at some other options. Now, if you zoom out from the Caribbean, you've got 2 options left, which is essentially Egypt and Turkey. Now, Egypt, you can only buy a government, same thing. You see the trend here, government approved project. You can, but there's a lot more choice. It just has to be a government or government-backed developer. It's not that much choice, even if it is more than what you would get in the Caribbean properties, for example. But the reality is probably the best properties you'd like to buy in Egypt, for example, in downtown. You've got New Cairo, you've got Zamalek. I know Egypt fairly well. We have an office there. Essentially, a lot of those properties, if you're looking at them, they're probably not going to be in the places that you want. That might change in the foreseeable. I don't know if you've seen the news, but there is a lot of changes regarding changing generational tenancy, where essentially some people up to 3 generations a property would stay in their name, and the government is trying to change that to try and free up property because of the population increase, and it's putting pressure. And some of these properties are really old and need some renovation. So you might see that actually changing. In a previous life of mine, I spent a lot of time in Egypt, working and consulting with certain developers. So I know quite well the North Coast. I know Emaar, for example. I know Aura, which also has, incidentally, a project in Grenada, and the UAE. So we're pretty good in that type of background. And then lastly, Turkey, which I think is really good if this is your first time around. When it was $250,000, it was a really good deal. And those people who bought there, some of them are clients. I still remember being in the Bosphorus like a week before the price increase with one of my clients. It goes up to 400,000. It's those people who bought 250 have done very well. A lot of them my clients. 400,000 is still a good deal. Your ROI, your rent, you're looking at 5-6%. You've got to be really careful in Turkey. It's very difficult to get qualitative data from there, but and also you need to make sure it hasn't already been the property wasn't purchased by someone who already did obtain a second nationality, because then it's not eligible for you. You don't want to fall into that issue. There's no shortage of people trying to tell you to buy a new build property, new build development. There's a lot of that stuff going on, and it's high risk. It'd be better to go through an older property which is there and you know what you're getting into. I typically don't buy off plan in my own personal portfolio around the world. I have done it in the past, but I typically don't do it. But I would say Turkey's quite nice for you, because if you think about you want to get Turkey, it's a pretty robust country, extremely liquid. It's probably more liquid than any of these properties. Passport is decent. It's not obviously one of the best, but if you're keeping a primary passport that is a strong one, then you don't really need Turkey for visa-free travel. You want Turkey because it's a big geopolitical heft of a country that can really help you out. So Turkey's quite interesting. Those are all the countries that you've got that will give you a second nationality through in passive investment, like amazing. You don't have to get involved in it. You don't need to be running. You don't need to create jobs. You don't need to move there. You don't need to learn the language in some instances, and actually in all of the instances. So that's a good deal. One thing I would say is these options generally get more complicated, more difficult, or get really very oversubscribed. We used to have Spain closed. We used to have Greece, more expensive. We used to have Ireland immigration program, which had some real estate, social housing, closed. UK, even when we had the UK Tier 1 program, that was £2 million, you were able to put £500,000 of that into a property. And a lot of people did that. Guess what? It's closed. So look, they're all closing. So this is what we have today on the shelf. Some of these are still very attractive options. I think one of them is probably my favorite. You could probably guess which one it is. Argentina, I know you're all talking about it. I know you're very excited about it. I can tell you it probably is an extremely high chance it won't be just a pure real estate, just buy it and just leave it alone. If it does, fantastic, amazing. I think without, rushing in, check the minutiae, do DYDD, do your due diligence, and then maybe do Argentina. But I don't think there's really any possibility. I've mentioned it in other videos, but I mentioned it again. I think the best option would be to invest in some kind of a vineyard or some kind of farming business where the underlying asset is the land that is underneath it. That would be my play. So let's see if it comes through. But if it isn't, these are your choices. Let us know if you need our support using all of our years of experience within real estate and citizenship by investment. I can tell you I don't think there's really any other company that has that level of experience in both levels and with all the verticals inside. If you'd like to read more about my personal background and opinion and experience on investing overseas in many, many different countries, I'm actually, I think, at 10 or 11 different countries right now, but I have invested personally in over 30 properties. But if I was to think about all of the clients I've looked over in the last quarter of a decade, I mean, it's easily in the hundreds. I mean, probably not 1,000, but hundreds. In any case, I was recently featured in Luxus magazine actually talking about this, which is how to build a resilient international property portfolio. I talk about many different things in real estate, which not a lot of people really talk about through in emerging markets or established markets, or kind of places like the UAE, which I really like, which are getting the sweet spot between emerging and traditional markets. But in any case, have a look there if you think it's of something of interest. And remember, better to be a year early than a day too late. Thank you. See you soon.